I am a professional investor and I'm competing in the US Investing Championship for 2026. There's my information down below. Today, we're going to be learning top 10 trading lessons from another market wizard, Lance Bernstein. So let's watch this together.
Here are my top 10 trading lessons from 2025 that you can use to level up your P&L this year. I'm Lance Bernstein, and I spent 15 years sacrificing my health for wealth while making over $100 million in verified trading profits. Now, I mentor and teach trading because trading is hard and most will fail. But my mission is to equip you all with the same knowledge the pros get. 2025, in my opinion, was the second best year I've ever seen in terms of opportunity. I find that this holds true not just for me, but across most of the firms and traders I work with. Why? Except for 2020, this was the most consistently active year I've seen, and it was active across a bunch of various strategies. Crypto was moving big all year. We had the tariff panic with some of the biggest moves and breaking news opportunities I've ever seen. We had periods of some incredible long momentum plays, like those in the quantum names, Tesla, and more. We had small caps waking up. We had hot IPOs like Circle. We had massive sector rotations.
By the way, everything Lance is talking about here was resulted in the price movements. Okay. Yes, news came out. Yes, fundamentals changed, but it didn't matter for an opportunity unless the price was presenting those opportunities.
Out of and back into fraud and speculation, fueled by the powerful theme of AI innovation. The standout across all of those, though, this might have been one of the best breaking news markets ever due to the quantity and magnitude of moves caused by tariff headlines and AI-related headlines. In my opinion, most of the months in 2025 would have been the best month during a normal, average, quiet year. So let's dive into it. The first lesson I have for you all was also my most costly lesson this year. The biggest mistake I made was not having enough cash on hand as collateral
Ooh, that's interesting.
in my trading account. Having worked for a firm most of my career, I hadn't yet had to learn this lesson. Every day, I showed up and I could rely upon my buying power being there and even having more if I needed it. In my trading account, pretty much all of the collateral is long-term equity holdings. Boring stuff like SPY, but also some longer-term single stock holdings. And during the sell-off, those long-term holdings got hit hard, really, really hard. So while the market was offering some of the best trading opportunities of the entire year, panic, dislocation, forced selling, insane risk reward, my long-term book going down meant my buying power got crushed. At a time when I wanted as much buying power as possible, I actually ended up trading off my back foot and needing.
I'm a little bit surprised by that. And granted, what you can hear right here is an actual trader talking about actual portfolios, not some YouTube, Instagram guy trying to flex and be like, buy my course, bro. No. He's being realistic here, right? He wanted more money to trade with, but in his trading plan, and I'm not going to judge his trading plan, he's going to do what he's going to do. In his trading plan, he had that those funds locked up. Really interesting, right? Does that mean that he will be more agile and be able to click in or click out of different positions? At least that's what I do in my trading, right? If I need, like yesterday, right? I got out of SPXL, which was up bigly since we bought it, and I sold off about half my position to fund 4 new positions, which are all doing beautiful this morning, right? And because of that, I didn't have to stress that I didn't have enough capital at play because that was part of my trading plan. I'm not going to judge him for having a different trading plan. That's totally cool. I just think that's really interesting.
To factor in a whole other layer of complex decisions that I was not used to. Do I sell my long-term equity holdings and SPY for more buying power? How do I sell this stuff that is down 30?
So that is exactly what I did. I sold my SPXL, I sold my SPY holdings to get buying power in order to do this. So just, I don't know. I find this super fascinating, but I also really appreciate that he's being honest about that.
30% or more when it's so likely to bounce? What if I sell all these holdings, then I'm not at my desk for that one Trump tweet and I miss the whole market bounce anyways? Because
Right. So what he's talking about right there, he's not thinking those. He knows exactly what he's doing because he has a plan. But those are the type of second guessings that most novice traders, most people who don't do this as their day job, are thinking to themselves every single time, or almost probably every single day. Do I sell? Do I buy? What do I need to do? Right. I totally get that. He's not actually thinking that.
when the market sells off, Your investments don't just lose value, they steal your ability to deploy capital into the best expected value setups of the year. The real cost isn't the drawdown on the long-term holdings, but the opportunity cost of being handcuffed during the moments where EV or expected value is the highest. Additionally, I never want to be margin called, and my trading takes up a ton of margin. As a result, I was locking in losses to reduce exposure while simultaneously swinging the bat a fraction as hard as I would have wanted. The end result, this mistake between losses and opportunity costs probably could have cost me close to $10 million. Lesson learned, I need to always be thinking about my underlying capital because it is often during those moments when you lack the buying power that you want it most. As a result, ever since then, I've been reducing investments across the board and building up liquidity in my portfolio. My advice to you is to reflect on your collateral and stress test it against various market scenarios, making sure you will always have enough ammo to trade when it's best rather than being forced into defense.
That's a great perspective. One of the things that we teach around here is where is it at? It's right on this side of me. Sitting in cash and not effing up her portfolio, right? When things aren't working, and I'm a bit surprised by what he was saying was that he was watching his investments go down. He's long-term SPY holdings going down, but at that point, it's probably advantageous to go sit in cash, liquidate those positions, and sit in cash and don't f up your portfolio. It sounds like we should tell Lance he needs to go sit in cash and don't f up sometimes. There's nothing wrong with that.
Lesson two, experience pays. Never forget about those old playbooks you've built up in past markets. And if you don't know what a trading playbook is yet, make sure you watch this video where I explain it. This year was a reminder that the best and most adaptive traders don't just have one strategy. A robust, resilient trader has a library of playbooks to utilize when the market calls for it.
Okay, this is cool. So Chris, throughout the history of time, was either in positions or in cash. That was it. Now, thanks to Scott last year, thanks to having quants on staff that helped us develop Plan ETF, now we have a 360-degree, 360-day plan so that when there are times to be aggressive, we're aggressive. We're buying long options. When there are times to be defensive, no individual positions are setting up, we can go into Plan ETF. And so we're doing 3x leverage on the market. And then there are times when the market's not working out either. Boom, straight to cash, straight into ESCA, which actually has a yield of about 4.3-ish%, give or take. And because of that, we're actually getting paid to sit in cash. So he's 100% right. And this is actually something that I implemented in 2025 as well. Pretty cool.
This year, knowing how to trade breaking news paid big. If you traded the 2018 Trump tariff battle with China, the playbook was virtually the same. Building that skill set 7 years ago paid massive dividends in 2025. Building a panic playbook from 2020 during COVID also paid dividends in 2025. A long momentum playbook from years like 2021 paid huge in late 2025. I love trading IPOs, and a hot IPO market is what helped me break out early in my career with my first 100K months. So I was happy to see Circle and a handful of other hot IPOs make the return. You get the point by now. So what do you do if you only have one strategy or playbook? If that strategy is working, great. Trade it, refine it, grow that play to the max. But if you ever find yourself in a market where you're not able to capitalize, there's almost always a strategy out there working. You need to take the time to study what the market is calling for and build that new playbook. Collaboration with other traders will help you do so. Observe the charts that are moving, even if you aren't trading them. Write up the charts, build databases of these.
This is cool too, because honestly, this is an area where Chris really struggled. Chris definitely needed to make some improvements upon. And I was either, being very aggressive or being super defensive and just holding cash. And now I have like a midpoint in between, which is already paid great, which is already doing great, right? And you'll be able to see down below there is actually my exact trading plan PowerPoint is down there, and my exact trading history, I guess you could say, my exact portfolio of every trade that I'm taking on in the U.S. Investing Championship is linked down in the description below of every trade I'm taking. It's a Google Sheets is what I was trying to say. So definitely check those out so you can follow along as well.
And reverse engineer how you might be able to capture the moves. Over time, test and iterate new plays into your repertoire. If you didn't capitalize on some of the amazing breadth of opportunities this year, that is life. Do not feel bad about it, but take action and make sure you're documenting them and learning from them. Most people watching right now won't actually do this, and you'll just keep missing the big trades, while those of you who put in the work at least have a chance of catching that next big trade. As we will get into later, there were tons of areas this year that I hadn't previously successfully traded before, but I was able to grow from my mistakes in the past and capture them this year. The market has regimes, and each regime rewards different behavior. The mistake I see traders make is they act like what worked last month or last year should work this month or this year. They become
Oh, he said one of the most dangerous words in finance. What is the most dangerous word in finance? Do you remember?
they act like what worked last month or last year should work this.
Should. Thinking of what happened last month or last year should work this month or this year, right? And think about it this way, right? SoFi has had a huge run. Absolutely, hands down, I am not going to say that it didn't do that. But just because it did it in the past does not mean it's going to do it again, right? There's actually something called the 50-80 rule. When you see a big moving stock like this, 50% of the time it can go down by 80%. And 80% of the time it can go down by 50%. But not SoFi. SoFi is the future of finance. There's no possible way it could ever. Wait a minute. It went down 52% in 2025. It's already done it. Don't tell me it can't do it. So just be aware when you see a big, beautiful stock like this, right? All stocks are bad, but every once in a while they act right. SoFi has definitely acted right a couple times, but it's out to steal your money. It's out to steal your money. Just because it's done this in the past does not mean that it will continue to do so. Let's go to Nvidia, right? Nvidia has looked huge in the past, but it's also gone sideways since October, since September, since July. Nvidia is at the same point that it was in July. So we're pushing 7 months now of absolutely no gains whatsoever. Just because it has moved a certain way doesn't mean that it will continue to do so.
This month or this year. They become emotionally attached to being one type of trader, and it becomes their trader identity. I'm a momentum guy, I'm a small cap trader, or I'm an IPO trader or a swing trader. That identity is dangerous when markets change, but you don't. So lesson 2 is a simple reminder. Document your playbooks, research and develop new strategies, and over a long enough
Couldn't agree more with that.
career, you can rest assured that that work can pay off big over time. Lesson 3, even an old dog can learn new tricks. There were 2 areas of improvement that I was particularly proud of this year. The first was huge progress I made in my ability to recognize changes in market structure and sentiment. I had taken time to study what the top looked like in all the frothy names back in 2021. Then this year, when baskets of stocks started to get really crazy, I did an amazing job identifying that euphoria as the market structure started to break down beneath it. This wasn't a call on the overall market, but just on the most overvalued names like the quantum sector, rare earth,
Oh, hang on.
in the overall market, but just on the most overvalued names
I own MP at this very moment. I own that.
like the quantum sector, rare earth metals, and names like Oklo. Not only was I able to capture those names short and even catch the lower high second leg short in many of them, but this also helped me avoid losing my gains by continuing to play long momentum breakouts. Many of my peers were still so focused on playing long that they didn't notice the momentum breaking down and adapt to those changes. Certainly doing so takes a lot of experience and is quite an advanced skill. I'm not sure I would have been able to take such a big picture view and make these plays even a few years ago. One other area I did
Oh, wait. Alan, MP's flying today. Speaking of MP, yeah, MP's up about 3% right now. Yeah, it looks great. In fact, that's at my first rolling point. So maybe on later today, I'll be able to roll up MP. Now, when I look to roll options, I'm taking risk off the table. I'm taking partial profits and putting them back into my account. I can do anything I want with that. I can make new trades. I can go to Costco, whatever. That's my money. And I get to keep the trade on. If you are interested in learning more on how to do this, go to outlier.com, grab the annual pass for 82 cents a day. It'll give you access to our Discord. In our Discord, you'll see every single trade that I put on, and you'll be able to get access to the invitation only live streams where I use Outlier to find trades like MP and put those trades on. So little side tangent here. Let's keep going.
did well on was trading Circle short. In fact, this might have been my best ticker of the whole year. For reasons beyond the scope of this video, when Circle went parabolic in late June, I was highly convicted that Circle was going to absolutely melt by year end. It very much reminded me of when Beyond Meat IPO'd. Circle capitulated on June 23rd. I
Hang on. Once this goes back out, let's look at it in the market cycle.
felt strongly that that would be the top, and holding a core short would be one of the best opportunities of the year. I tried my best to hold it.
Market cycle, baby. Stage 1, well, this is IPO, so it had its stage 2 right off the bat. Stage 3 is where the moving averages are crossing over, and stage 4 is a big nasty decline, which is exactly what happened here. All stocks are bad, but every once in a while they act right. Also, right, don't buy the dip. Okay, Don't buy stocks as they're crashing down because you don't know how far down they're going to go. But if you buy stocks as they're crashing up, you also don't know how high they can go. So don't buy the dip, you look to buy the rip. And this is a perfect example. You don't know how low it can go, and you also don't know how high it can go. Stop buying the dips.
The core position short, covering dips and adding on pops. Incredibly, I was able to navigate that view into year end and got exceptionally aggressive as we broke below $110 in November. Circle ended up panning out exactly as I expected using Beyond Meat as an analog. And referring back to lesson number 2, this was a playbook I was never able to execute well back during the Beyond Meat IPO, but many years later, I was able to dust it off and make the best trade of my year. It goes to show that even after 15 years, I myself am still learning, observing, and finding ways to improve my game. For someone that spends a ton of time now creating great YouTube videos, publishing twice a week, it was nice to see that I've still got it. And this is a good time to subscribe if you haven't yet. Lesson number 4. The biggest, most scalable money is in swing trading, but that doesn't mean it's the best.
Oh, okay. Swing trading is where I live. Swing trading is anything between overnight, so basically one day, and let's call it a year, right? Swing trading, don't label yourself in anything, by the way. Take opportunities as they come, stay in the trade as long as it lasts, and then get out of the trade once it stops working. Okay. You can get in a trade on Monday and get out of the trade on Tuesday if it's not working. But you can also get in the trade on Monday and hold that for 6 months before it stops working. Okay. So don't label yourself in anything. But that is type of swing trading. There's day trading, there's long-term investing. Swing trading is honestly, in my opinion, as well, the best place to be. But it may not be right for you. If you can't handle holding something overnight, swing trading is definitely not for you. If you can't handle having to monitor positions and then knowing where to get in and where to get out, swing trading may not be for you. Maybe you need long-term investing, right? You need to come up with a trading plan that fits your personality, because if it doesn't fit your personality, you'll never trade it, right? Think of it this way. If your wife took you to go see the latest rom-com and you're like, oh, I don't want to watch this movie, how interested are you going to be in it, right? You're not going to be interested at all. Just like if you took your wife to go see the latest Batman movie and you love Batman and you're so stoked to see Batman and the Joker and Scarecrow and Penguin and the Riddler and Mr. Freeze and all them fighting it out, right? You're going to be super into it, and your wife's going to be rolling her eyes, maybe falling asleep. Right? Understand? Same with your trading. If you don't identify with the trading plan, you're not going to be into it. But once you find a trading plan that works for you, you can just absolutely go crazy on it, and you could do it for the rest of your life. In fact, my son asked me one day, I'll never forget, I was sitting on the couch tying my shoes, getting him and his brother ready for school. He goes, Dad, how long are you going to be trading? I looked at him and I said, until I stop breathing, because I love the game. You can probably tell from my passion. I love the game, so I can do this forever. And it may not be for you, and that's okay too. That's okay too.
Best money for you. While probably the topic of a future video, it is my belief that intraday trading offers the best expected value. And if you are someone that is good at quick decision making and can stay glued to the screens, which for most traders shouldn't be a problem.
Which is not for me. The last thing I want to do is be glued to screens. The absolute last thing that Chris wants to do is be glued to every tick in the market all day.
Intraday trading is the best area to focus on for an assortment of reasons. That being said, swing trading is where a lot of the biggest and most scalable trading opportunities can be found, because you can put on larger size without the same liquidity issues of intraday trading. If you're trying to become truly elite, ass in the seat is not optional. This is a performance profession. You don't get good casually. And
Oh yeah, exactly right about that, right? Success doesn't happen on accident. And hang on, I'll pause
is
it.
not optional. This is a performance profession. You don't get good cash.
This I completely agree with, because think of it this way, right? If LeBron wanted to be an amazing basketball player, which he is, one of the greatest. I don't know a lot about sports, but I know LeBron. Do you think that he, did as a side job? Do you think that he did it, in his free time? Do you think he did basketball as a hobby? No, of course not. Of course not. He wanted more than anything to be successful. And that's not normal. You have to do things that are abnormal to be successful. You can't be an amazing, think of it this way, right? There's two pieces of the pie. Have balance in your life and be incredible at something that is performance-based. You cannot be incredible at anything in life and have balance. There will be trade-offs. There will be trade-offs. And whether that's downhill skiing for you, whether that's archery shooting, whether that's underwater basket weaving, whatever the case is, if you want to be world class at it, you can no longer be normal. It's just a fact.
Casually. And for the most part, scalability only becomes a problem once you're actually trading large amounts of capital. As a result of those two factors, though, what I've seen is that more and more of my trading has moved towards swing trading. Swing trading this year provided some incredible Quala Maggie style swing long opportunities with huge scalability. I'm still not an expert at these strategies, but I'm learning. In fact, I even made this video on how Quala Maggie structures his long swing trades. What has been so fascinating is seeing how simple but effective systems truly work across all products and timeframes. There is certainly a learning curve with swing trading, much like everything else, but if you've been hesitant to expand timeframes in search of more liquidity or less screen time, I highly recommend you prudently and safely explore it. So the point of lesson 4 is to be open-minded as far as scaling your trading across timeframes. Lesson 5. This move has been apparent to me for a while, and I've been tweeting the highlights in the news, but the move to 24/7 trading is coming, and it's coming fast.
Ugh, I don't want that. I don't know about you, but it is nice to unplug a little bit, right? Like on any performance metric, right? If you only if you had to do the same performance 24/7 and play at the same level 24/7, that would be exhausting. That would be mentally taxing. I personally don't want that.
We are moving toward a world where the financial markets are ubiquitous. You can trade any product any day of the week at any time. In a world that becomes more continuous, some of the old boundaries disappear. Market hours, overnight gaps, weekend breaks. Many traders have asked me what I think the implications of 24-hour trading are. The truth is, I myself don't fully know. I suspect the market will always need an opening price and a closing price for market structure reasons, but what will happen to certain technical strategies if there's no such thing as a gap up or a gap down? I don't know, but I do know traders will need to adapt. There is one implication I'm sure of. As markets increasingly go 24/7, it will become more and more important for traders to set boundaries. It is not healthy to be on the clock 24/7. As the world increasingly moves that direction, how can you make sure your trading doesn't interfere with your sleep? What opportunities might you be willing to trade during weekends? Does it need to be a $1,000 trade or a $10,000 trade? Personally, this move towards 24/7 trading has been one of my least favorite changes over the last few years and has already
That's really interesting that he agrees with me.
meaningfully impacted my life in a bad way. Many know how much I care about my health and peace of mind. Yet now with Blue Ocean and equities trading nearly 24 hours a day, it has made my move towards swing trading far more costly in terms of lifestyle. There were so many days these past few years that I've barely slept while monitoring exposure or trading in and out of positions. This move towards 24/7 trading has affected my ability to focus at the gym, to focus when out to dinner, and to get to sleep on time and capture that oh so important deep sleep. My solution so far? I've implemented technology to block me from checking quotes and trading during times when I should be asleep. At 9 p.m., my phone is pretty much neutered and it's time to relax and get
Wow, that's really interesting. So clearly he's trading like futures markets and stuff, which I am not doing right now, and I don't know if I ever will. I have tried in the past, and it's just not for me. But yeah, I you've got to have that separation. You've got to have that downtime, right? Think of it this way, right? There's day and night. There's time to work and there's time to rest and recover. If you're always on go, it's like a battery that's constantly being drained. At some point, the battery will totally crash out because there's nothing left, right? It's like driving your gas car as far as you possibly can, and there's no time to refuel. We have to go, but you're only going to get so far. You have to stop and refuel in order to get further in life. Dude, I totally agree with this. I don't want 24/7 trading. That's the last thing I want.
ready for bed. In the morning, no trading or checking quotes until after I am up and have gotten my morning sunlight. The truth is, though, when something really crazy is going on, I inevitably continue to sacrifice my health for more wealth. Old habits and identities die hard. But this is an area I continue to struggle with. I try to always be real with you all, and I think many of you are going to struggle with this too. Lesson 6. ChatGPT is a tool that can amplify you as a trader, and if you don't take advantage of it, you will be trading far below your potential
Okay, that sounds interesting. Teach me more.
over time. Let's be very clear. ChatGPT is not your edge. It does not magically make you profitable, but it can compress time and increase throughput. It can help you summarize catalysts faster, organize your journaling, generate checklists, create trade plan templates, and more. The traders who use tools like this well are not using it to predict price. They're using it to do more high quality work per minute. More prep, more review, more clarity with less wasted effort. In a world where information is cheap, the advantage goes to to the person who can translate information into action efficiently. For a few ideas of how I use ChatGPT in my trading so far this year, check out this video. Lesson 7. Don't waste too much time trying to understand or listen to the fundamentals.
Yup. Why? You're not getting paid on the fundamentals.
Your time as a trader is better spent understanding sentiment and studying the chart. I'm not
Sentiment, fear, and greed. Are stocks getting more greedy or less greedy? In a nutshell, the way the outlier works, we're trying to find the greediest stock in the greediest sector while the market is getting more greedy. And at some point, there comes a point in time where it no longer is getting greedy, and everybody who's left who was greedy is going to turn what? Fearful. So outlier measures which or when the fear and greed values reach an extreme, and then they start to turn the opposite direction, right? That's what we're measuring here. If you want to know what goes into the buy and sell signals in here, that's exactly it. When the fear and greed reaches an extreme and starts turning the opposite direction. That way you can get in on the sweep up on the greed and get out before it starts sweeping back down on the fear. Right? Markets are driven on fear and greed. The markets are not efficient. Efficient market theorists will tell you that the markets are efficient because everybody acts rationally and everybody can process the exact same information at the exact same time. So there's no way that markets could ever be inefficient. That's total bullshit. When's the last time you acted efficiently when you got some interesting news? Interesting, good or bad? Probably not, right? You acted emotionally because that's what humans do.
not saying fundamentals don't matter in the long run. I'm saying your paycheck as a trader comes from price action. The chart is the only truth. My best
Dude, this is exactly what I've been saying for so long. Nothing matters except price.
trades happen when I'm listening to the chart. My worst trades happen when I'm fighting it. Think back to the April 2025 tariff sell-off. This was an emotionally charged time when the world was changing quickly. Literally, one headline was moving global markets by multiple percentages. We're more lost than anyone. While fundamental analysis was failing to keep up to the daily changes, the technicals never stopped being a true North Star you could rely on. It isn't that the news or the headlines don't matter, but the chart is at least 80% of my decision. Sentiment is a big factor, and the fundamentals just really aren't so big of a deal to me. I still laugh over a tweet Kuala Maggie had that he was compiling a list of the shittiest companies possible so that he could monitor them for long setups. So many traders try to rationalize price action. Most of the time you can't. Price action is simply the aggregate actions of global participants buying and selling. They all have their own individual reasons. Trying to overly logic or use fundamentals to rationalize a move is a fool's errand. Most moves are not fundamentally.
Exactly. Exactly. Most moves mean absolutely nothing from a fundamental aspect. So why are you spending so much time poring over the fundamentals? You're wasting your time. Think of all the other things you could be doing instead of looking over all of these different chart well, let me rephrase that. All these fundamental charts, right? Like the bar charts and the pie charts and things like that. None of that matters. You will not get paid on the fundamentals. But the fundamentals, you will not get paid on fundamentals. The only way, and come at me, bro. If you want to disagree with me, leave it in the comments down below about how wrong I am. Oh, but you see, when it's got a new product and the same store sales have been going up by 25% for 6 quarters in a row, that means that means that the price is going to go up, right? How are you getting paid? When the price is going up, right? Come on, people.
Driven. They're driven by sentiment and those buying and selling. The chart always reflects that. Never, ever lose sight of the chart. Lesson 8. Advanced traders should be trading all products. Not because you need to be a master of everything overnight, but because the best opportunities rotate. As I explained in my video on expected value, which you can watch here, I am for the most part an expected value maximalist. Every decision you make should be thought of in terms of expected value. It is foolish to assume that the best expected value trade will always be in the product class that you are most familiar with. Some years, there are incredible opportunities in crypto. Some years, there are incredible opportunities in futures and options. Over the last 4 years, I've done a really great job of expanding my comfort zone into all those products, and I've been pushing the traders I work with to do the same. There is an 8-figure P&L per year trader I work with who is exceptional at trading equities. I was able able to expand his comfort zone, and I helped him structure the same short trade in circle that I did using puts. He ended up having one of his best trades of the year in options, and options are now a tool he is focusing on in 2026 to help him elevate his trading game even further. I'm working on a video about the pros and cons of trading all the different asset classes, so subscribe if you don't want to miss it. Lesson 10. Just kidding. This is lesson 9. I just want to make sure you're still with me. Beware of the comparison game. This year, I got the privilege.
Oh, I think that's really important as well, right? And now I am competing in the US Investing Championship for 2026. And one of the things that I have acknowledged is I'm not going to set any expectations on the outcome. I have no idea how much I'm going to make by the end of the year. And even though it is a competition, I don't know if I'm going to come in first place. In fact, I think it would be amazing if we could get some of our other outliers who are also participating to beat me. That would be tremendous. But because of that, I'm not going to deviate from my plan. My plan will produce the results that the plan will produce, and I can't change that. I'm not going to modify the plan. I'm not going to go off script. And I'm while I can actually do comparisons A to B, it's not going to change anything about what I'm doing, right? And also, don't forget, most people on the internet are not actual traders. They are salesmen. They're trying to sell you a course for $5,000 a quarter called their Wall Street Protocol because it's so much better than the last course that I sold you for $10,000. The reason I'm in the US Investing Championship, the reason that I'm putting my trades down below is to prove that you can be successful in the markets. I'm showing you how to do so. You can choose to listen or you can choose to fight the obvious. I put my money where my mouth is. Outlier works. I'm showing you how it works.
Of mentoring more traders than I ever have before. I worked with 3 trading firms and hundreds of traders across all experience levels. Want to know the most universal issue I heard from everyone? It didn't matter whether they were 6 months in or 6 years in, unprofitable or an 8-figure P&L per year trader. Most everyone struggles to some degree with the comparison game, especially in the age of social media where the most successful people are the most visible ones. So many traders developed skewed expectations of this job. I mentored beginner traders that didn't know that trading is a multi-year learning curve to find.
Oh, dude, that's so true, right? Year 1, expect to lose. Just honest to goodness, expect to lose. Year 2, if you can break even by year 2, you are in the top 10% of traders. I know that sounds crazy, but it's the truth. Year 3, maybe you can get a profit. 3 years deep before you get a profit. Year 4, if you can repeat year 3, you might actually be able to survive in the markets. You might actually be able to survive in the markets. But there's other people who didn't survive in the markets, who didn't sell or don't have any idea how to trade. All they know is how to sell scams. So listen, Outlier's 82 cents a day, which clearly the opportunity here is making money with you. That's what we're trying to do instead of making money from you. Very different perspective, and it should be very obvious that we put our money where our mouth is.
Profitability. I mentored traders that didn't know compounding accounts at 100% per year would put you amongst the best traders ever if done consistently over decades. And they all dealt with the pervasive feeling that every trader around them was finding more success than they actually were.
By the way, Brandon, right? Brandon has bucked the trend. He's up 35% in his first year because he listened to what we talk about here. Dr. J is up 68 within 1 year, and he hasn't even got to a full year yet. Outstanding. We need to rush through this video. Manny Cam, just let me know it's 9:01 a.m. Let's go to our final lesson here.
It's only about you taking the daily actions that will get you to where you want to be.
Boom, exactly. Personal accountability. I worked with a trading psychologist for years, and this was the biggest thing that we took away, which is have the personal accountability to follow your plan. You cannot tell the market what it's going to do. All you can do is follow the plan that you've created. And once you have a positive edge, that makes all the sense in the world. Listen, if you're ready to save time, make money, and start winning with less risk, click one of these 2 videos. Have a fantastic day. We'll talk soon.